One of the reasons why I had gravitated away from residential to commercial was because the client is more of a long-term client and more of a lifetime client, just because they're constantly coming to you for advice and they're constantly coming to you for financing. Because, you know, if you're going to buy one investment property, you're typically going to buy more. You know, there's clearly a void in the arena that I play in. And it's clearly because it's really tough for an investor to get somebody like myself who will sit there and go, okay, show me the property. What are you trying to do? There's some, you know, a couple of key elements that we have to talk about, you know, in order to help me get you where you need to go.
All right, welcome back to our Speak Life podcast. My name is Mark Mee. Thank you for joining us today. I got a good friend of mine who I've known a very long time, and he's a mortgage banker, Ryan Merritt. And, you know, Ryan, you are a real estate lending executive with over 25 years in the banking sector, which is a great accomplishment in and of itself. You're the founder and CEO of Morlen Capital Advisors.
Yep.
Which is a commercial mortgage brokerage firm.
Yep.
You guys are focused on serving entrepreneurs, investors, in this ever-changing world of investment property and finance. I mean, we know how much this thing changes and shifts, but to be where you're at, you've got to be on top of it all and still be able to navigate the waters. You're the chairman and COO of Dwelio, a digital real estate referral platform that empowers realtors. And I think, like, when you start stacking your career deck, there's not a lot you haven't seen, right?
There's way more to that. There's way more to that resume too.
Yeah, I know,
of all these different little
pockets of banks.
Yeah, like I have more of an entrepreneurial mindset and you know love business and real estate and investing and you know it's interesting navigating that.
Yeah, and I know. I've known you for about 15 years, but we've also kept in touch through the years. So I've known you. You've been at a couple of different stops, and in the banking business, it's kind of inevitable that you're going to be at a couple of different stops.
Sure.
Because of what you need at any given time to take care of whatever clientele base you're moving toward, or trying to add to your portfolio, and it's so you're sometimes picking up products and banks or portfolios that you didn't even know you'd be picking up. And so it's a very interesting winding road.
And there's new products that come out and, you know, banks can do, you know, certain things that other banks can't do. And it just, it has been a long and windy road.
I love it though.
For sure.
And with sowing seeds today for tomorrow's harvest, we got Ryan Merritt here. Welcome to the podcast, brother.
Thank you.
How are you doing today, my man?
Doing good. I'm doing good.
It's good to see you, bro.
Thank you for having me. It's been a while.
Yes, sir.
It's been a minute.
But it's good to see you. And
yes, likewise.
And so give us a little bit of a backdrop. You know, how did you get into the mortgage business, into the lending space? Like what drew you to that space?
You know, I could certainly give you a fancy.
Nope, just give me whatever you got.
It was the money.
Yeah.
Let's be honest, right? Yeah. It was the money. You know, when I first started out in my career, it was, you know, I started out, you know, in investment banking and, you know, was a broker on Wall Street for a number of years early on. And, you know, this was in the late 90s. And at the time, everybody was transitioning out of, you know, more of a trading mindset and into more of this wrapped fee-based business, which is what everybody does now.
Got it.
You know, and at the time, I just didn't like the energy of that. Just didn't like, there was no, the excitement just didn't, what am I going to do? Put you in a mutual fund, charge you 1% and I'm not going to do anything, go play golf. I mean, there wasn't really any excitement in that, you know, and so I like to do a lot of trading, but unfortunately, you know, the firms that and I was with some bigger name firms, you know, they wanted to do the fee-based business and that wasn't really what I was looking to do. But then I also didn't want to just go be a trader either, because traders are that seemed to be just a crazy mental health challenge for me. You know, working in the city, you know, working crazy hours, you know, didn't really appeal to me either. You know, and at the time I had become friendly with a financial advisor in my firm, and he said, listen, you know, you should talk to my buddy over here. He's in the mortgage business. He loves it and he's killing it. So it was literally as simple as that. And I went and met with him. We chatted for quite a while, and started with him. Like a month or two later, and it was ever since got the bug.
The rest is history.
There's a lot of activity in lending, and that career path has certainly gone, like I said, gone a long and windy road, but. There's a lot more activity. There's early on, helping people, get into their first home, and that whole thing. There's some gratification in that. Mentally, for the soul, it feels good. But now over the years, I've transitioned away from doing a lot of the residential stuff, and really what I found probably to be more of a home for me is in the commercial space.
Got it.
And doing a lot of commercial lending. I mean, I still do the residential stuff.
Sure.
And that goes back to one of the firms that I left when you and I were working together.
Right.
Left and went to Millennium. Started there, trying to develop their sales team, but then left and went to a bunch of banks, in the city and around here, and then naturally found my way back to Millennium. But that's only to do the residential stuff.
Got it.
It's more of like I have to have my license somewhere in order to be able to do it. But most of my business now is all commercial. My bread and butter is commercial.
Just an amazing. I mean, literally, the industry is so fascinating.
Yeah.
I mean, it literally is. I mean, you could finance so many different things from a banking standpoint. You've chosen real property.
Yep.
Right. And so, from a hard money, commercial, residential, you've seen everything. You've seen a lot, and this industry is ever changing. Sure. How are you navigating, or how have you navigated the change of the economic climate in any given season? Right now, in 2023, interest rates started shooting up the ranks. I mean, which basically hurts significantly. When the rates are really down, your phone doesn't stop ringing.
Yeah.
And when the rates are up, I mean, how have you navigated this world to continue to put out the type of product that you put out?
It's a great question, and on any given day the answer could be different. I promise you, because you run the full spectrum of emotions, within the space,
Trust me.
It's in many ways, the lending business is very different than a lot of other service-based businesses. And I think part of it is because there's a lot more emotion involved in it.
Yeah.
There's a lot more counterparties involved in it. And, like for example, with insurance, when you're doing insurance, it's just you and the client, maybe the carrier.
Right.
But you kind of know, like, hey, you're going to fit in this box and that's it. There's really not a lot of,
right.
It's black and white. Right?
Yes.
In lending, right. It's not quite.
Very gray.
It can be.
It's extremely.
And I think we've, as an industry, we've tried to do a pretty good job of making it more black and white, but inevitably, there's all kinds of different factors at play. Risk and compliance and qualifications, and then you layer in, capital markets and investment bankers and banks and all these other people that get a say in the conversation. And that's why it makes it just an ever-changing environment. So as they say, you got to have your head on a swivel. That's sort of what it's like in the mortgage world,
right.
in the lending space. You got to have your head on a swivel and kind of know how to pivot. I think one of my core strengths has been just structure, just knowing how to structure. Just sit down with a client and just try to go through, some basic questions, but the ability to analyze and interpret, those questions and answers and be able to help structure those deals for clients. I think that has been one of my core strengths and one of the reasons why, I have a reputation more as a closer. A lot of, especially on the commercial side, residential is kind of just residential. Like either your income is what your income is, and this is what you can qualify for. There really isn't. That has become more black and white. But in the commercial space, it's more.
Yes.
It's more open. It's more of a, I dare I say, wild west. But structure is hugely important, and having the right right person behind you really matters in terms of helping you structure deals and
I see.
and especially in the smaller, price range, which is where I play. Generally speaking, if you're buying a $50 or $100 million apartment building, you typically have your people in place. You have your attorneys, you have your financing in place. You kind of have all that done. It's not really a space where I play in, although I'm starting to move into that space now, just by virtue of having clients.
Yeah.
But in the smaller,
what range are you typically in?
I don't know, man, a couple $100,000 up to maybe $5 million.
Got it.
There's such a huge void in that area. And the way it kind of works is, let's say you're an investor. Maybe you've got 1, 2, 3 investment properties. Maybe you've done okay. Maybe you got 10. But you've played in a smaller space. And now maybe you're going to graduate to, hey, I want to buy a 10-unit apartment building or a 20-unit apartment building, because I see this happen all the time. It's just like sort of like this natural progression from an investment standpoint. All right, I'm going to buy a 2-family, I'm going to buy a 3-family, buy a 4-family, accumulate a bunch of those, and now you're going to graduate to, hey, I'm going to buy an 11-unit.
2 families.
Yeah, right.
I'm sick of 4 families.
Well, that's another kind of sidebar conversation, because that's one of the things that I do see from an investment standpoint, where one of the things that investors don't really talk about is, hey, it's awesome to see everybody be successful on social media, and I'm buying investment properties and I'm doing all this stuff, but very few people talk about hey, what does it actually take to manage that? And I'll use my brother as a great example. Has a very nice portfolio, has a ton of doors, but he manages it all himself.
Wow.
And I can't tell you how many times, I talk to him. He's like, oh my God. He's like, I got a call at 2 a.m. The boiler went, or the toilet's broke, or this or that. And when you're self-managing, you're getting up and you're fixing that.
Lord have mercy.
It was last year or the year before, we had a cold spell over the holidays, and it was literally like 0 degrees, and he lives in Pittsburgh. It was like literally 0 degrees, and one of his boilers was going out in one of the buildings. And it was an older system, and there was some pressure valves in the system that had to be released. So he literally slept in the boiler room of the house for that night, because it was so cold. Because every couple hours he would have to get up and release the pressure in the system. I don't know all the mechanics between this, because it was an older system, but those are the things that very few people talk about from an investing standpoint. And I don't know, unfortunately, I lend the money, so I don't have to deal with all that. Sure. But I say that because, a lot of these investors, they accumulate a 2-family, 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 3-family, 4-family, and then all of a sudden they got all these doors, and then all of a sudden it's like, wow, I can't deal with this. I got to get out of this. This is too much, and then they sell all that, and then they graduate to a bigger building that's maybe got a management, to it. But what inevitably happens is they don't know where to go for the financing for that. So what they'll do is they'll either, let me go to whoever I do my banking with. Wells, Chase, TD, whomever, right? And that's just a natural, inclination to do that.
Which is typically a disaster.
Oh, I can't tell you how many times I get a phone call from that. And not because, any of those banks are bad. It's just, there's a reason why you have an individual who's getting a salary at a bank.
Right.
They're typically not the best person from an advisory standpoint.
Right.
They're just there to do a job.
They're not looking to structure. One of the key buzzwords that you said was structure.
Yeah.
And that is your claim to fame, right? Or your claim to what you do. And the only thing that makes you a commodity is that.
Yeah.
The ability to listen, hear, structure. Once you become good at structuring, you're the go-to guy.
Oh, yeah.
So can you break down a little bit about structuring deals and what that looks like when you're trying to manage a client portfolio, when you're trying to manage your pipeline, and you got people coming to you, calling you, because you can't do every deal, but you want to believe you can. And so,
I can. I shouldn't say I can. I can do a lot of them.
A lot of them, correct.
The challenge is the client, or you may not like what I'm telling you. You may not want to do what I'm telling you to do. but I look at it like, you have to, part of that conversation when structuring with clients is knowing what their goal is. What are you trying to accomplish? Like I had, it's as literally as simple as this, and knowing being an investor myself, knowing what that mentality looks like for a guy. Mm-hmm. I had a client, he emailed me the other day, and he was just asking about the value of a property that we were looking to finance. Mm. And I knew he was in his mind, he was asking if the value comes in higher. Now, he didn't specifically ask this in the email, but in his mind, he's going, if the value comes in higher, can I raise the loan amount? So as soon as in my reply, I'm like, okay, I know what you're trying to do. If you're asking if the value comes in higher, yes, we can raise your loan amount. He goes, awesome, thank you so much. Because yes, that's what I was looking to do. Mm-hmm. So it's just kind of understanding what the client's objective is first, and then from there, then you work backwards, right? It's okay. What are we trying to do? You're trying to acquire the property. Okay, that's the main goal first. Then it's what's the proper financing on it? Then what because there may be some value add that you can do, or maybe it's a bridge loan type of situation. Get you do the acquisition, acquire the property, and then you can do all your work to it, and then in a year, 18 months, we can talk about a permanent financing. And so that's really the important part of it is understanding the client's mentality and what their goal is, and then structuring backwards from there. So, I'll use my brother again as a good example, because he listens to me, love him. So thank God. But he came to me with another property that he was looking to buy. It was a rundown old building, like 18, built in like the 1890s or something, like early 1900s. Anyway, it was an old building. So, he's like, I want this building. He goes, it's right around the corner. He's like, I really see the opportunity with it. So we went through what the building was, the amount of work he would have to go in and renovate the whole building. So we talked about what his renovation budget was going to be, how he was going to finance the renovation. He was going to pay cash for buy the building, do the renovation in cash, and then at the end, get it rented, and then have it rented for a certain period of time, rent stabilized, and then from there, then you do a refinance, take your cash out, and just have permanent financing on the building, tuck it in a drawer for 10 years. Mm-hmm. And let it cash flow for you. And this was the first time he'd actually done this.
How many units was this?
This was a 3-unit building.
Okay.
And what was nice about it is it had a garage out the back, four garages out the back. Okay. That he's actually talking about now, ripping the roof off the garage and putting a 4th unit over top of the garage. But anyway, so he does this. He acquires the property. We get financing on the property. Mm-hmm. Does the renovation. Costs him like $100,000 for the renovation. And he does like all, floors, kitchens, bathrooms, et cetera, in the units. Gets it rented. He's super ecstatic about getting it rented. And then he has it rented for 6 months. So the renovation took him about 6 months. And then he got it rented, had it rented for 6 months. A year after acquisition, he goes to his local bank where he has some of his stuff, does the financing on it, pays off the original loan, pulls out all of the money that he put in renovation, and in fact, a little extra, because he did so much value add to the property that the value had now, I think he paid $300 for the property. The value had shot up to like $450 now.
Wow.
So now he gets all of his money back out of the property, and it's cash flowing like, I don't know, like $1,500 a month, $1,800 a month, something like that for him.
Okay.
Man, he's ecstatic.
That's amazing.
Ecstatic. So it's that situation where you're trying to help with the structure, but also kind of coach a little bit
with the vision.
Yeah, this is I know where you're trying to get to with this.
Yeah.
But if you take a minute and listen, we can talk about what the journey looks like, how to get there, and at the end, it works out. And at the end, I can't tell you, like every day he was calling me about, I'm going to the bank, they're giving me this, what do you think? Should I do this or should I do that? and at the end, after he closed, he was like super appreciative and super thankful, just because he's at first he was a little unsure of the journey, but at the end now he's gone on now to buy other properties and do this several times now. So it's
how does that make you feel? Like when you're part of the structuring, when you're part of the vision casting, when the vision casting goes right, and everybody, how does that make you feel about the industry and what you do inside of it?
Awesome. Awesome. There's a lot of gratitude that goes with that, and you're thankful and you're appreciative of the client, and they're appreciative of you, and one of the reasons why I had gravitated away from residential to commercial was because the client is more of a long-term client and more of a lifetime client, or client for life, as everybody talks about. Just because they're constantly coming to you for advice, and they're constantly coming to you for financing, because if you're going to buy one investment property, you're typically going to buy more. It's very rare that you find somebody that gets the real estate bug and then just stops after one.
Sure.
They typically want to buy more, and so that was one of the other main reasons of gravitating away from residential into commercial, was just the clients in. Not to say that residential clients are bad. It's just
they buy one.
It's transactional. It at the end of the day, they typically, that's their only house. Some people live in that house for 30 years, and you'll never hear from them ever again.
Right.
And because of the margin compressions and because of everything that's happened in residential real estate, it's not really a huge time. The value of my time in that environment, is diminished. Especially with me being able to give the kind of advice that I can give.
Yes.
And the other aspect of that is I'm competing with a 22-year-old kid, not to be disparaging towards him, but he's been doing this for all of 5 minutes, lives in mom's basement. He doesn't have kids going to, a mortgage, wife, kids, cheerleading and dance and all this other stuff, and so for me to try to compete with that, with some of the younger guys coming into the residential space, it was just like, what am I doing here? I'm beating my head against the wall trying to compete with some of these younger guys. But gravitating into the commercial space, there's clearly a void in the arena that I play in. And it's clearly because either you go to a local bank and the loan officer there is just biding his time to get to retirement, and he's doing barely the bare minimum, or you don't, a lot of the investors on that side, they're forced to kind of go it alone. They go to the internet, they go to Google, they go to some of these other forums, and they listen to people, and some of them have good information, and some of them don't, and it's really tough for an investor to get somebody like myself who will sit there and go, okay, let's show me the property. What are you trying to do? What's your timeline on this? How much money do we have? Go through some basic, to kind of circle it back to structure.
Strong.
There's some, a couple of key elements that we have to talk about, in order to help me get you where you need to go. But the first one is just actually acquiring the property and controlling the property. Because once you got the acquisition and you control, that's it. Now you're good. Now you can figure out the rest. You're pretty easily.
Dude, when you transition, so you just said a lot about resi versus commercial, why you moved into commercial, what the value prop for you is there, the market that you serve. When did you decide that you were going to transition into commercial, and how did you get your experience? Like, who did you sit under somebody? Did you just become just a straight up student? Did you start gobbling up information?
What? You'll love this and appreciate this. So I have a loan officer that's been with me for years on the residential side. Great guy. He's a little bit of a train wreck, personally, but great guy. And the kid hustles. You definitely got to admire the hustle. Like right now, he's doing factoring, like we were talking about before. And every time I talk to him, it's always like, man, he's a little bit of a hot mess, but kid hustles.
Right.
So a couple years, and I've always been doing commercial, on and off for most of my career. Most residential guys will run into commercial.
Sure.
A couple times a year. So I don't know. It's got to be like 8 or 9 years ago. He and I connect, and we're chatting for a little bit, and I'm like, and he's talking to me about these deals that he's doing. He's doing like these, 5-unit apartment buildings, mixed use buildings, storage stuff, and I'm like, talk to me about this.
Wait.
Talk to me about this.
Hold up. Me knowing you, before you sit down and go talk to me about this, your interest is already way peaked.
Oh, yeah.
Because there's no way you're going to say, talk to me about this if it's not of real interest to you.
Because he's talking to me about the money, right? He's talking to me about the money. And listen, I'll be honest with you about that. Everything that we do, is rooted in some way in money.
Yeah.
But so he starts talking to me about the deals that he's doing and the money that he's making. And I'm like, are you sure? Like, show me these HUDs. Show me these settlement statements. I want to see some of this. And sure enough, he's sending me stuff. Like signed HUDs. Like, not like.
Yeah.
I'm like, okay. I'm like, all right, you got my interest. Show me a little bit about this. And this has got to be like 13, 14, 15 maybe. Right?
2015.
Yeah.
Got it.
Yeah. So we were going back to like almost 10 years now.
Got it.
So I'm looking at this stuff and I'm going, it's interesting. Tell me what you're doing. So we have lunch one day where he's just telling me what he's doing and how he's doing it. And he's playing in a more grimier space than I'm comfortable with. But I can see the value in what he's doing.
Yeah.
I can see, where he does the hustle and he does the groundwork, the foot soldier out on the front line. I'm taking a step back and going, all right, let me survey the landscape here and see what's going on. And sure enough, as I'm starting to see what's going on, you can clearly see that there's a void here. And it's like, okay, hold on, wait a minute. Not a lot of people aren't doing investment properties. Not a lot of people are financing, investment properties this way. There's clearly a void for this. There's clearly a need for this. And he was early. God bless him. He was early on in this whole non-QM, sort of, wave that has overtaken the mortgage space now. So, as he's showing me this stuff, I'm now starting to do my own research and I'm starting to dig into this now. So now I'm like, okay, I'm connecting with banks. I'm connecting with big mortgage lenders. I'm connecting with big insurance companies. I'm connecting with all these people and I'm learning on the fly. Now I've been in banking before.
Yes.
Right. So I know the vernacular.
Sure.
And so it was a very easy transition to know, okay, I'm looking for this, or we need this, or this is how you're going to qualify that. And just having that banking background made the transition very easy. But no, there wasn't like I'm working under this guy and he trained me on the business. There wasn't a mentor or some kind of coaching relationship with anybody. It was all on the fly. Learned it on my own, and here I am today. Doing a pretty decent amount of business in commercial now.
It's funny how the market will find you, right?
Yeah,
it's funny how if you set your path, the market will find you, and so as you start digging into commercial, it's like buying a car. You never looked on the street and saw the car. Once you own the car, you see it everywhere you go in every different color. So I'm sure commercial business started to find you.
Well, what it was, so to that point, what inevitably happens is I'll have a conversation with an individual about buying a property. And if they're somewhat new to commercial, and when I say commercial, I don't necessarily mean like a big office building like this, or a big, industrial space, or a 50-story building in Manhattan.
Sure.
Maybe it could be a small little retail, building in downtown, mixed use in Morristown or something like that. But what inevitably happens is that client comes to me, they're newer, and they start asking me, how do we do this? Because they don't know. I want to buy this building. What's it going to take? Okay, well, you got to do it this way. You got to do it this way. You got to do it this way. And then there will almost every conversation or almost every client I have or had over the last few years, there has been an aha moment. And the aha moment is, well, hey, what if you do it this way? Or, hey, what if you structure it that way? Or, hey, have you thought about doing it this way? And then they're like, you get that little pause, and you're like, they will go, oh, you know what? That actually makes some sense. Okay. Yeah. Okay. What's the rate? 12%. Oh, okay. Right. So they become less rate sensitive because they see the forest through the trees.
Right.
Yes, they understand that rate is important, and that has an impact on their cash flow, but they're also looking at the bigger picture too. And so one of the other main differences between residential and commercial is on residential, they're hypersensitive to rate. It's an emotional transaction. Yes. It's their only house. It's the house they're going to live in every day. They're going to see those four walls every day and know that they're paying a slightly higher interest rate. That eats away at them. When it's a commercial building and they're generating $1,000, $2,000, $5,000 a month in cash flow, that conversation is much less, or that thought or concern is dissipates pretty quickly. So
that's awesome. Because I'm reflecting on my mortgage career and like trying to get into the commercial space. It just seemed, yes, there's word tracks and there's ways in the door, and you start getting on calls you never thought you'd be on. Yeah. And now I'm looking at oil deals and I'm like, okay, but how do I where's the money? And like, in other words, everyone's pontificating. I know you've been through this.
You're touching on a nerve right now.
Where everyone's pontificating, but where's the deals? And so because you're a brass tacks cat. Like, yes. If it's not making sense, you're running out the back door. And so the navigating of this commercial space where you have these amazing dreamers who want to tell you about.
I can't think we can tell you the amount of deals that I see.
From this to that, and bringing in this, and in 5 years we're gonna do this, and like, so I ran because I needed to run. I jetted to insurance, but I commend you again because you're closing deals, you're making it happen. I think if I was able to do that, I would probably still be in the banking business doing commercial, because commercial made sense. It feels like you were dealing with real players, like entrepreneurs and investors, but there's still this incredible amount of dreaming that's taking place. And so I couldn't necessarily navigate that to a HUD one. And then there's you. And so talk to us.
This kind of circles back to the conversation of structuring. The structuring is more self-serving than it is, as much as I love the idea that I'm helping, and I am, the structuring also helps me with time and managing my time, because you like I said, you're touching on a nerve. I mean, the amount of conversations that I have with investors wanting to buy real estate, I could fill my entire day just talking to people
without it making you any money.
That's right, and that's the challenge. That it has to be a healthy balance,
right?
And one of the things that I've done more recently, recognizing this, when you're only doing a couple deals, here and there, it's not as evident to you.
Right.
Now, as a core business, it's every day. Now it's like, well, hold on, wait a minute. Hold on, wait. I got you. I know that you're trying to buy. I had a guy come to me not too long ago. Right. It is funny because you're just You're right when you have a lot of dreamers, and you have to be able to manage that conversation.
Right.
You have there's a lot of people with a lot of dreams, and you have to filter.
Right.
And that initial questioning and structuring helps to filter, which helps me to manage my time more efficiently to work on projects or work on deals and loans that are going to move forward.
Correct.
Right? Like, I'm not going to take a loan if I know I'm not going to close it. Right. Or if I can't close that deal, and typically the way I work is, we'll have that initial, introductory call and do due diligence and figure all this deals out. But what'll also happen is once I know that, then I'll either in my head I'll already know, okay, that can fit in these, box of lenders, or I'll put it out to sort of, I guess if you want to call it, like put it out to bid or put it out to a bunch of lenders. Hey, what do you guys think? Would you do this? Would you entertain this? Give them a more detailed, explanation of the property. What's funny is a lot of people want like a narrative on, tell me a story. A lot of lenders want stories. They want, tell me about this guy. Yeah. Do you know this guy?
They do. Especially on the commercial side.
Oh my God.
They want to invest. They want to land on the owner. Right. As much as they want to land on the property. Oh my goodness. It's amazing.
Some of it's funny in that way. So, but a lot of times I'll do that so that when I come back to you on a second or third call, I already know, here's my list of lenders. Here's what my rates are going to look like. And yes, I can do your deal. And it's already been pre-flighted, with a handful of people. So I know that it's good. The difference for me is most mortgage guys don't do that, or most residential mortgage guys don't do that. Most commercial guys don't do that either. They're just throwing stuff against the wall and seeing what sticks.
Right.
They don't take the time to do the due diligence and structure and filter, so that they're not wasting their time. I can't tell you how many loan officers come to me and tell me, hey, I'm working on this deal. Well, did you ask this question? 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 And then all of a sudden, it's like, just tell the client, call me. Because they're not helping me to do their deal for them. And the other challenge there too is, more often than not, the client's expectation of what is going to occur is way off.
Distorted.
Yeah, it very much so. And so, the time, like I said, that's a little bit of a nerve for me right now, because the time aspect of things, there has been days where it's like 4 or 5 o'clock, and I'm like, oh my God, I haven't done anything today that is like business development. Other than having conversations with people, but like I haven't moved the ball forward today.
Right. Yeah.
Like, and there's moments there where it's like, oh my God, what? I mean, you look at yourself in the mirror and you go, hey, I eat what I kill, right? I don't have a salary. I don't have a, and
I know it,
right?
I know it.
And so, it's a very delicate balancing act. You want to seek to serve, right? And you want to give people the right information, and you want to help them navigate the journey of investing in real estate and doing it correctly. But I have my kids. My daughter goes to cheer, and she does competitive cheers. It's not exactly cheap, and dance and house and mortgage and cars and vacations and all that other stuff. Sure. That costs money, right? And so I have to be delicate with my time, and that can come off wrong sometimes too. Is hey, I'm not trying to cut you off, or I'm not trying to, I'm not. I want to give you my time, but I understand that there's a value there to it as well. And if your deal doesn't close or we don't do a deal, I don't make any money. So
no doubt. How do you navigate the rapidly changing industry, the market? What do you keep up with day to day that keeps you informed with the market? Because every market's different, every industry's different. Yeah. You probably have 2 or 3, maybe even 4 syndications that you're constantly checking.
Yeah.
To see what's happening.
I do a lot of reading. What
are some of your sources that you like, that you prefer?
It's just a menagerie of different websites, different blogs, different stuff like that. Obviously financial related. And it what I can tell you today is finance and investing has changed so rapidly over the last couple of years that everything that you thought you knew, you don't, especially or the things that historically would happen are not happening, given certain economic activities and reactions to certain data and things like that. So, like for example, yesterday inflation came in hotter, but mortgage rates were down.
Right.
That's not, and the reason why that's important is because if inflation came in a little bit hotter, that means that the Fed's probably not cutting rates, which means that the market's reaction to rates, that the Fed was going to start cutting rates, was overblown, which means that rates should have gone up, not down. So it's just, you have this really weird, a lot of anomalies happening in
weird,
finance
dude.
and
It's
in
very
the market.
weird.
It is. And it's tough to keep up with.
It's perplexing.
It is.
It's challenging.
Yeah.
Because it's hard to, like, everyone thought that the real estate market was going to go down based on interest rates going up.
Yeah.
But it froze the amount of inventory on the market, which kept values up.
Yeah.
Which is wild.
Yeah.
And so it's hard to predict. And so living in that space the way you do you have a go-to weaponry, or are you just Swiss Army knife? Or you always have a Swiss?
I always I'm reading a lot. I do read a lot of stuff. I find myself either in the mornings, because I usually get up early. I'm usually up like 4 or 5 in the morning, and I'll usually read, and I'll do emails and read. So you might get an email from me like 4:30, 5 o'clock in the morning, right? But that's usually the time where I have nobody bothering me, and I can sit and read and follow up on this stuff. But if anything, one of my go-to sites is Zero Hedge. They do a pretty good job of giving an unbiased opinion, because and that is a number of different blogs connect into that website, and it's good because it gives you some interesting perspective on politics. It gives you some interesting perspective on finance, but it's a financial, has a financial bias to it, so it's something that I read pretty frequently. A lot of that stuff for some people, may be a little over their head, from a finance perspective. But for me, it helps me to at least give some hard data, and for me to be able to filter that out to our conversation with you and I as an investor, because one of the questions I get like literally every day is, hey, where are rates going? What do you think is going to happen with rates? What's going to happen with real estate? Right. So that's a great conversation to have, to the predictions for 2024 and 2025 and what that's going to look like. But, it really is hugely important to stay plugged into, the goings on of the economy and the Federal Reserve and finance and the banking industry. I can tell you right now, there is a little bit of a shifting of the sands underneath the surface in
regards to
banking.
Break it down.
So last year you saw what happened with, First Republic and Silicon Valley Bank and Signature.
Yep.
The reason why that all happened was, these banks were putting out mortgages at, 2-3%. And at the time, if you equate that into a bond, right, the par value of a bond is 100, right? And let's say that equates to a 2% rate. Well, today rates are 6%. Right. So in order for you to get that same equivalent rate on that bond, the value of that bond has to go down in order to get that same rate today, to get a 6% rate today.
Sure.
So you may have, let's say, and this is just, back of the napkin, sure, but let's say that bond, in order to get a 6% rate, has to be trading at 70 cents on a dollar, 60 cents on a dollar, so to get that equivalent 6% rate. So what's happening is a lot of these banks wrote all these mortgages and they put it on their books at par.
Right.
But in reality, if they had to go sell that today, they're selling that at a 40% discount or 50% discount. And in many cases, a lot of these banks, they don't have the equity to absorb that loss, which is partly what happened with First Republic and Signature and Silicon Valley.
Right.
They had negative equity. So the bank, basically the bank is a zombie bank or is insolvent. And that's a very broad, sure, explanation on what it is. But, a lot of the bank, as a result, a lot of the regulators and a lot of the banks themselves really became hyper-focused on deposits and their equity. And they're all now focused on increasing their deposit base, making sure that they're stemming the flow of their deposits outward to other institutions. And what has happened, for me at least, is a lot of banks are now, like, let's say you're a prime borrower, you've got good income, you're a classic example, like good income, you could go buy an investment property, do a full doc deal and get, the most competitive financing for a building or for a piece of property, right? Well, If I go to a bank for that, the bank may not, even though you may be considered an A borrower, they may want a deposit relationship from you, which you may not be willing to do.
Right.
You know, because now all of a sudden you're going to buy these buildings, and let's say they have a fantastic, let's say they have a 6% rate on a commercial deal, which is phenomenal right now, but you got to put $100,000 in that bank.
Right.
And now you're like, oh, really? Well, I don't want to. I got to have another banking relationship because you've already got TD Ameritrade. I've got Fidelity. I've got Wells. I've got Chase. I got this. I got that. You know, I got credit cards with everybody.
Right.
You know, and you know, I think the consumer is at a point where they're just saturated with banking relationships and they just don't want them anymore.
Wow.
But the banks are forcing that behavior because they're saying, okay, well, I'm going to give you this rate and I'm going to do your deal. I want a deposit relationship. Typically, that deposit relationship looks like 10 to 20% of whatever the loan amount is that they're lending you. But you know, it's sort of an interesting shift. And so, if they're, even though you may be a plain vanilla prime deal, you know, they want they know that they know that they have a little piece of gold and they're extracting their pound of flesh for it, and that pound of flesh is, hey, we want a deposit relationship. I literally, you know, you and I were talking beforehand about one of these mixed use buildings that we're doing a cross collateralization on. One of the banks that I went to, they were like, look, if the borrower's not going to consider moving his entire banking relationship to us, we're not going to do it.
Wow.
And the guy was like, no way, what are you talking about? I've been with Chase for like 20 years.
Is that the same way as saying we're not going to do it? Because you almost kind of really like.
Kind of.
Yeah, right? Like, how many people are willing to do that? Not a lot.
There's not a lot. There's not a lot. And but that shows you the state of banking right now is that that is becoming a requirement on a lot of loans. You know, and so it's really unfortunate that they're forcing that behavior. It's more of a survival tactic than it is anything else. But that shows you that a lot of these smaller, you know, regional or local banks, they have some problems going on behind the scenes.
You're an extreme wealth of knowledge in this space. It's pretty awesome to catch up on this stuff. It's been a while since I looked at this as, you know, dialed in as you're explaining it all.
Yeah.
It's fascinating. You've been sowing seeds in this industry for a long time. You know,
yeah.
Helped a lot of loan officers become successful. You've had extreme success.
Yeah.
You have relationships everywhere because you're talking to a lot of different folks.
Yeah, you're in it. You're just in it, and you're doing it every day. Yeah.
You know, what do you believe in for a harvest in 2024 and beyond?
When you say harvest, what do you mean? Like what?
In any form of what you do, you know, you have your eye on a prize. You have your eye on a prize as a commercial lender, or the type of clientele that you want to morph into, or clients that are taking you to higher.
What are my goals places for 2024? I guess
because they want more out of their portfolio. What do you see as a harvest for your practice moving forward?
My business is, you know, I'm now on a my struggle is more of an entrepreneurial struggle. You know, I'm now at a point now where I'm busy enough where I need to start hiring people. You know, I need to now start really make some hard decisions business wise. You know, about building a real business, building a real firm. Yeah. You know, early on, you know, doing this, it was, you know, just more transactional. I'm handling it myself, you know, maybe one other person. But now that I've gotten as busy as I've gotten, you know, now it's you know, for 2024, my vision is more of, okay, now I need to expand. Now I need to grow. Now I need to build. I need to bring in some competent people to support me and get me where I need to go. You know, this year, you know, I could easily see my business. You know, it's one of those things, you know, as an entrepreneur, right? You always go through that initial phase of figuring out what you're doing,
right?
You know, kind of bumping along the bottom, and then all of a sudden it's right, and then everybody looks at just the last 12 or 24 months, but everybody forgets to look at, hey, this has been, you know, 6, 7, 8 years in the making, right? Sure. And figuring it all out. And then all of a sudden you get it wasn't just yesterday that I figured this out and all of a sudden just popped, you know? So 2020, when I look forward to 2024 or through 2024, you know, I look at 2024 being that pop year.
Got it.
That being that this is where, okay, I have to make some really tough decisions business-wise. Not tough decisions, but just really
looking it in the face.
Yeah, like, okay, I got to hire this person. I got to hire this person. I got to hire this person. I want to do this. I want to build this. Right now, one of the big things that I'm doing right now is I'm doing, redoing, websites and marketing and CRMs and, that stuff will pay huge dividends down the road, but it's a huge time suck right now. right? Like
these are the decisions of entrepreneurs. I mean,
they are.
I love this stuff more than anything.
Yeah.
But again, this idea that, hey, here's where I'm at. I can either stay the same, which generally means you're going to go backwards.
Right.
Because if you don't answer the call, people have to move their business.
Yes.
Or answer the call and elevate.
Yep.
Right?
Yep.
And so is that challenge nerve-wracking, or is that just...
Oh, you don't even need to ask the question to know.
But you're taking those steps anyway.
I'm taking the steps anyway, and I'm doing what I'm moving forward. One of the, where it's an interesting topic right now because, I am changing a lot of what I'm doing, to on anticipation of growth, right? And what got me here today won't get me there tomorrow, right? And so recognizing that I need to shift a little bit and change to get to the next level, because ultimately the next level for me is, a full mortgage lender, lending my own money, lending, warehouse lines and becoming a much bigger player in the space, because there really is, I know you'll appreciate this too, having some mortgage experience. A lot of the lenders that I deal with, what's different about the commercial side than the residential is a standardized, hey, this is Fannie Mae or Freddie Mac, you follow those guidelines, that's it. Commercial, it's not.
Right.
Everybody's different. Everybody wants different things. Everybody does different things. Everybody asks for different things. And that has probably the singular biggest challenge for me. When I'm doing a couple of deals, not a problem. I can navigate that on my own. But at scale, that won't work.
Different base.
Yeah, it's a different process, and what I envision myself moving towards is more of a boutique commercial advisory firm.
Nice.
Where it's like I'm counseling clients on slightly larger deals. The reality is, doing a $200,000 or $300,000 or $400,000 mortgage on a commercial deal, it doesn't really it doesn't pay enough. For it to be worth the juice isn't worth the squeeze kind of thing, and it's unfortunate.
But what's crazy is that deal you would bring into your practice if you were scaling it, because you would need some people that can work that deal. Right.
There's some younger people that need the experience to be able to do that deal. Right. For me, it just think about it in anything in life, right? Eventually you look at, I'll use, some of the more successful realtors that you've seen on television, right? They're not doing a $500,000 condo in Manhattan. They're doing $50 million condos in Manhattan, right? Like conceptually the same thing, right? After a while, it becomes a time value,
time value,
conversation, and unfortunately, as we scale and grow, we have to do that. But for 2024. I see myself, moving up the rung, to be one of these more, like I said, boutique, type of advisory, commercial advisory firm, where we're lending I'm already lending money anyway, privately, but, also doing it at scale with, a lot of larger insurance companies. I have relationships with a lot of large insurers now, being more corresponding with a lot of these lenders now. Where we're the direct lender, not brokering. So 2024 will be a big year.
I love it.
Yeah.
Ryan Merritt, CEO of Morlen Capital Advisors. Ryan, if they wanted to work with you, how could they find you?
I'm on everything. Instagram, you can check me out on the web, Morlen Capital, morlenadvisors.com. You can catch me, on Instagram and email and wherever.
You've always been a go-to wealth of knowledge for me. When I'm fishing for mortgage advice, I'll give you a call because you're in it, and I know that being removed is not the same game. So thank you so much for sharing your wealth of knowledge today with us.
Pleasure.
Speak life, baby. Ryan, it's so good catching up with you, man.
Likewise.
Thank you so much for listening,
for
guys. Please subscribe, like, share, and by all means, comment. Let's have a conversation. Ryan's a expert in the commercial / residential lending space. You have questions about rates or this or that and the third. Let's open up the conversation. A lot of knowledge shared today. Thank you for listening. God bless you guys. Thank you, Ryan.
Thanks for having me.
Appreciate you, buddy.
All right, love it.
God bless.
Thanks.